great future. We're talking real money.
Imagine, if you will, the following scenario. It's June of 2025. You just got a job that pays you $115,000 a year. Good work. You're feeling good. But your company is a tech company, and they pay in Bitcoin. After taxes, you're bringing home about $7,500 a month. So you do what normal humans do. You build your life around that number. Rent, car, insurance, groceries, streaming video, a little bit every month into a Roth IRA. You spend about $7,000 a month. You're comfortable, not crazy. Now fast forward to February 2026. Same job, same work, same effort, but suddenly your take-home isn't $7,500 anymore. It's $5,200. Your annualized income just dropped to about $62,000 after taxes, and nothing changed except the value of the currency in which you were paid. Your bills are still $7,000. Your income is $5,200. You're short almost $2,000 every single month. So let me ask you, what are you doing right now? Panicking? Yeah, you are. Welcome to Talking Real Money. That scenario.
Very happy opening.
That scenario.
That's very nice.
That is not science fiction. That is real.
This is if you're getting paid in Bitcoin.
Yeah.
Yeah, right. Okay.
That is.
It's actually worse if you start in October.
No,
when it was
I
126,000.
started in June.
I know, you're kind. Because it's gone from 126,273 a coin in October to 69,000 this week. That's a decrease of 45%. You were very kind in your suggestion there, because wow, you live in the high life and then all of a sudden barely living.
The reason I am bringing this up and stating it in that way is because the primary argument made by the folks who are crypto advocates, Bitcoin advocates, is that Bitcoin is a better currency than the fiat, air quotes, dollar. No, it's not. It's proven not to be a good substitute. That's not what a currency should be. What, Tom? What's the number one thing a currency should be?
Pay your taxes?
Boring.
Oh, boring. Yeah, stable.
You don't want
Doesn't move all over the
volatile
place.
currency.
You don't want the Weimar Republic. You don't want the Argentinian dinar. No, I don't know what it is.
You're talking about
when you have these crises, it's horrible. You don't want that situation because it's so
the Rwandan dollar that a dollar used to be. You used to have a trillion Rwandan dollars for $1.
There's a wheelbarrow for you. I can't. But here's the thing about all this, and maybe we could talk about some of the reasons why, which no one seems to know why Bitcoin and crypto is taking. Oh, Don, you in the back row?
I'm raising my hand. Yeah, I know why.
Oh, okay.
I do know why, because the greater fools vanished.
The proponents. You don't call anymore. You don't write. I never got your holiday card. I mean, you just don't hear much from them as much, as you did. Pardon me.
There is no, again, this is the argument. There is no logical, sensible, I have to repeat it 3 times, use for Bitcoin. There is none. Your argument was it was a good currency. No, good currencies are not volatile. Bad currency, bad. Good currencies are stable. Good currencies are the dollar, the euro, the pound. These are good currencies. They're boring. Bitcoin is a bad currency. So what other reason does it have for existing? The only other argument left is to take advantage of the greater fool, hoping that there's going to be another idiot who's going to pay more for it than you paid.
And there's been, as you may know in the press this week, some discussion about a recent ransom demand that was also made in Bitcoin. So the criminals are still.
Well, it's a better deal now.
Right. Yeah.
We shouldn't even
true.
make jokes about that.
No, not that at all. But the fact is, yes, it's used in criminal practices for a variety of reasons. But I think the question most people say is, wait a minute, this thing was going to the sky. There was somebody last year in 2025 that predicted in 2026 Bitcoin going to $1 million, and now a 69,000 to $1 million is quite a ride. I'd have to get my calculator out there. But I think people are going to ask us, why is the bottom dropped out of what was one of the hot trades?
Okay, let's go back in time again. Do we need to do this? Yes, we do. Let's go back in time. Let's go all the way back to 1634 in the Netherlands.
That's before our time, too, by the way, just for the record.
Tulips were a single tulip bulb was worth as much as a house between 1634 and 1637. Then when people went, wait, it's just a tulip bulb, finally, the market crashed. The South Sea Company in 1711. There was a huge amount of hype over their trade with the Orient, as they called it then.
Yeah,
they
correct.
faked their profits. The whole thing, after 9 years, collapsed and destroyed a lot of money. Same thing happened in the 1840s with railroads. Same thing happened in 1924 to 1929 with U.S. stocks. Same thing happened from 1975 to 1990 with Japanese assets. There was a huge speculative bubble, but the reality was, in every one of these except the flowers, well, no, even with the flowers, there was something tangible in every one of these bubbles. Now
and what you're talking about with crypto, it's just air. It's just pure speculation.
There is, okay, you buy a house, and like in Japan, your house price, at one point, real estate in Japan, all the real estate in Japan was worth more than all of the real estate in the United States.
And for those of you playing along at home, the United States has slightly more land mass than Japan.
It's bigger with more people.
Yeah, quite a few more.
Okay, but anyway, let's assume your house went down in value. It plummeted. At least you can still live in it. Does crypto keep the rain off your head?
It didn't last a minute ago when I ran out to get the mail, no.
What is the problem with... I don't understand. I truly do not understand the thinking. You've argued with me and argued with me and argued with me, and there is no logic in your logic.
But the guy who's been one of the most public proponents of Bitcoin, who runs a publicly traded company called Strategy, Michael Saylor, says you just need to hold on. Minimum of 4 years. Hang in there. It's going to be okay with your Bitcoin.
HODL your GameStop. Again, at least GameStop has stores. You know, that's AMC has theaters. Crypto has,
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Hey there, welcome back to the show. I'm Don. That is Tom. This is Talking Real Money, the radio show about money matters of all kinds, because money matters a lot. And you are invited to call us and talk with us about your money situation at 855-935-TALK, 855-935-8255. By the way, speaking of a bubble, I forgot to mention.
Yes.
The U.S. real estate bubble that crashed in 2008, that burst. But I forgot the NFT bubble, which was related to the crypto bubble. It only lasted about 2 years.
Are those things still around anymore?
Well,
What's the
for
deal?
example, remember the artist Beeple?
No, I can't say as how I do.
Okay. He sold a piece of art called Every Days, the first 5,000 days. It was a digital picture.
Yes, that's it.
It sold for $69.3 million in 2021 at Christie's. Right now, they're trying to sell one of them for about $38,000. It's offered at $38,000.
How much of the 61 was money that came from the government, either legit or fraud? I remember the whole middle of all that. It was like, you want some money? You betcha. Go get him, killer. I mean, it's just ridiculous. So, yeah.
Again, and that again, you got something for that, even if it was just a JPEG.
Wait, 60 million to 40,000? Is that what you're
70
saying?
million, 69.3 to
Pardon me.
maybe 50,000, if we're going to be generous.
Wow.
And
Figure that rate of return.
And
net
again,
loss.
at least you got something. When you buy a Bitcoin, what do you get? You don't even get a nice certificate of authenticity or anything.
You get a thank you note from Michael Saylor at Strategy.
You don't even get that. If you got that,
going.
at least it would be something tangible. 855-935-TALK is our phone number. And back to your stuff. Let's go to Washington, D.C. Eugene, welcome to the show.
You were talking about Bitcoin, and it kind of reminds me of that Linda Ronstadt song, Poor, Poor, Pitiful Me.
Yeah, pretty much. Great song, great artist.
Billionaire Michael Saylor.
Yeah. I've been listening to you guys real tightly for about a year, and I try to listen every Saturday. And you say the bonds should be in your portfolio. And unless a lot of the mutual funds that I own and have owned for years have bonds in them, I don't own any bonds. But I got a question for you, kind of related. 2 more weeks, I'm going to have a very large 6-figure CD come due. And I've been kind of turning them over at the same institution. And over the last 2 or 3 years, the CD rates have come down. If I roll it over, it's only going to get 3.6. But I heard all this week that you could buy, and I'm not sure, this is why I'm calling you. When you hear on the radio that the 10-year Treasury is at 4.26, does that mean you could buy a new one at 4.26 or only sell an existing one for 4.26?
No, because the spreads are so skinny. You're gonna get it right at that yield. I mean, 4.25, It depends on the moment in time. The yield fluctuates because it's a tradable asset if you're buying it in the secondary market. But yeah, on a 10-year, you can get 4.2 something.
10 years.
10 years, yeah. But how long was your CD, by the way, Eugene? How long was your CD?
Yes, it is.
It could have been 18 months, could have been a year.
Okay. Because right now, the highest rate on a certificate of deposit at a bank or a credit union is 4.25% for 1 year.
Where is that? Where is that?
Farmers Insurance Credit Union is offering 4.25 NCUA guaranteed.
By the way, this is no secret that we have. This is readily available public information at bankrate.com. So you can simply go there every day, and it changes every day. And then we got a question about this too, Don, from somebody saying, Don McDonald loves bread. Yeah, because he uses it, but there's all kinds of other banks that are paying a similar rate. Yeah,
I mean, Bread is paying me about 4.1 on my high yield savings, but I'll tell you where I get my CDs. I go to Schwab and shop. They have brokered CDs where I bet you right now I could find a 4.2 rate on a 1 year brokered CD.
What, 1 year?
Well, is there anything wrong with my taking this $250,000 roughly, and just buying a 10-year at 4.2 something?
Well, again, you're betting that interest rates aren't going to go up.
This is why Don likes to ladder things, because then you get a variety of rates, and you're in a better spot if rates do change dramatically during that next 10-year period.
Well, I should have said this is not my only CD.
Well, then you have bonds.
The ones are about this big.
You have bonds,
and so my okay. Do I, you say?
CDs are the equivalent of bonds.
Yeah, he's saying you do have bonds.
Yeah,
you are fixed income.
I know. Yeah. But is there any downside if you keep the 10-year bond to maturity? There's no fluctuation in the price. You keep getting your 4.2.
Yeah, that's right.
Okay.
Yep.
All right.
By the way, if it's 250, here's the thing I think you should do, because you said you've been listening for about a year now, religiously, correct? Or give or take.
Don't drag me to the altar, but yes.
No, okay. No, that's not that dramatic, but I do think maybe, and since it's 250, Don and I get to D.C., you take us out to a nice dinner somewhere. I mean, something like that. I mean, just for the year of service we provided, no?
I'll push you up in a 4-star hotel about a mile from my house.
Oh, that's an even better deal.
Easy.
I'm going to D.C. I don't care how cold it is.
For that.
Okay, I lied. Schwab's highest rate on a CD right now is 3.8 on a 1 year. Darn it.
Yeah, we're just teasing you, Gene. Yes, we'd love to see you in D.C. But Don just says, what did you say? The
3.8 is the best 1 year I can get from Schwab right now.
Yeah.
But yeah, there's nothing wrong with locking it up for 10 years as long as you understand it's locked up for 10 years. If you go to sell in the interim and rates have risen, you will get less money. That is an absolute. But if you're going to hold it, you get it all back. Thanks for the call, Eugene. Thanks for being a religious listener and not marrying us.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
And our phone number is 855-935-TALK, 855-935-8255. Let me give you just for Eugene and everyone listening, let me give you an example of what laddering does. It takes out the guesswork. I created a ladder a couple of years ago of CDs. And right now, my 1 year, the one that's coming due in 26, that I'll have to reinvest
during the year 20. The money's going to be available again.
Right. That will pay off in 2026. It will mature in 2026.
Yep.
That CD, because I bought it several years ago. Yep. That CD is currently yielding 5.1.
Ooh, real money.
The 2 year 4.85. The 3 year 4.75. You notice rates have come down. The 4 year 4 even. And the 5 year 3.85. So what I did by buying them over those periods of time is I've averaged out a better than average rate on the current rates if I was just going with 1 year CDs. And I'm not taking the risk of the long term either because I always have new money rolling over that I can buy whatever the current rate is.
Slightly longer term. If you needed all that money, then you'd have to go pull it back, right? And then you'd have to pay
I make sure I also have an emergency amount of liquidity and high yield savings earning 4.1 that I can fall back on for those emergencies, so I don't have to touch that.
It's a matter too of how much work you want to do, right? I mean, because I have some fixed income, but it's in bond funds. Yeah. I don't have to do any of that work. It's somebody else is paying attention to all that. Am I probably making a little bit less? Yeah, maybe.
I also have a whole bunch of BND too.
Yeah,
I've got a very well diversified fixed income portfolio between high yield savings, Treasury zeros. I mean, Treasury I bonds.
Yeah, I bonds. Yeah, which we're paying 9.6. But
CDs now they're paying like nothing. And BND, which I love. I love BND. BND is
and I heard you talking to a guy out of moving it all to the. He wanted to move it from BND to what was it? Inflation protected securities.
Oh yeah, I don't think that's a good idea. I don't.
Yeah, so he wanted to dump all that and move it over. So.
Yeah. So
it's good stuff.
And here's and also for Eugene, the current with the spread built in, I checked with Schwab, with the spread built in, 10-year Treasury, if you bought it from Schwab today, you get 4.20. So that takes into account that spread between the 4.26
and frankly, after what he was saying he would do for us, the 4 stars, breakfast, lunch, and dinner, throw in a couple of decent bottles of wine, there might not be that much left over from the $250 to invest anyway.
Knowing you could pretty much spend all that.
Another vacation is coming up around the corner.
Charge it to the room.
I will use that to get to Italy or something. So there you go.
855-935-TALK is our phone number, 855-935-8255. And what we're showing you here is an example of how people should invest as opposed to our introductory topic, which was the stupidity of crypto that has killed people. So
yeah, it's fascinating.
What to do.
I mean, the topic, and when you read the explanations of what's happened, because the experts they just don't know. But the number one explanation is just a fascinating one, that the hot money has now moved from crypto, that's the 2021 trade. We're not there anymore.
Right.
To betting on. Wait, they're betting on the people that are betting on. They're moving their money to prediction markets.
Right. So they can just go to prediction markets and bet on crypto without actually buying crypto.
I know. It's just a fascinating. And anyway,
it's the latest hot greed driven trend. And that's money. Always. Yeah. And I hate to say this. It generally occurs. Generally, I'm generalizing. Got to be careful generalizing, but it generally occurs with younger investors who really haven't been seasoned by bubbles bursting.
tempered by something like 2008, which I just talked to the staff about this week, and people are like, what? I said, you got to go back. You got to read some of the books. You're in this business. You weren't paying attention to any of this 17 years ago, whatever it is, 18 years ago.
Yeah,
you need to know about that.
18 years ago. So all of these 30 somethings, it didn't affect them at all. They didn't even notice. I mean, I was in high school in 1974. It was a very bad year economically.
It was, yeah.
Did I notice?
Nope. You still got your lunches.
It was
chasing
just
the girls
life
around.
was what it was for when you're that young.
Except the gas thing was no fun then too. You had to get in line to get gas. That was not a good time.
I was too poor to have a car.
You didn't have any car. You didn't have gas. Didn't have a car.
And my granddad, I lived with my grandparents, and my granddad said, I'm not letting these damn kids drive my car.
There you go.
So
saves
guess what I took?
money right there.
Buses.
The bus.
There was no. I didn't worry about how much it cost to put the diesel in the bus. I wasn't thinking about it. I think I even had a little card that got me like free rides because I was a student. Anyway, hey, we are looking forward to talking with you about things that happen to you financially. Call us, 855-935-TALK.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
If you have a question and it has something to do with money, call us. I'm Don. That's Tom. Our number, 855-935-TALK, 855-935-8255. Now we go from Washington, District of Columbia, to somewhere in the state of Washington, and I'm not sure Sean knows where he is, so we'll just say hi, Sean, from somewhere in Washington. Welcome to the show, Sean. He's driving around. He doesn't know where he is.
Where are you, Sean?
Well, I do know where I am, in between Vantage and Moses Lake.
Wow. Okay,
Wow.
You're out on the road there, so drive safely.
What's up?
I am, thank you. Well, I have a couple of questions. I'm nearing retirement here, say in the next year. I'm kind of struggling 6 months to a year. Maybe I could run my financials real quick, and then I got a question on, I own my home. I want to park that about $600,000 somewhere, use it for rent for a year until my wife and I figure out where we're going to land. I guess that's question number one. Is you guys were talking CDs. I'm looking at hoping 4%, and I'm hoping to be able to get the money every month so I can pay my monthly rent for like a year until I figure out where to buy.
If you're going with that, if you're going with a short period, I really would suggest high yield savings.
Yeah, I'm just trying to run the numbers here on 600.
Because right now, high yield savings accounts are running right at 4. You can even find them a smidge over 4. They pay out the interest every month into the account. You can transfer it to your checking account and spend it. It's easy. It's really flexible, and there are no penalties. I'm sorry?
And that's going to be about $2,000 a month, roughly.
So so I have a Schwab SV. What is it? SWVXX.
Yeah, I know the fund.
About that right now. Okay. So I got 100 in there right now. You put another 600 in it with expected sale. Okay, now I'll run these other numbers. Got about 800,000 in Fidelity, another 350 in another Schwab account, $200,000 rollover from pension. The way I look at it, it looks like about 3 to 5, and then of course that house money. Do you think I'm ready for retirement in the next year?
What are your living expenses like? Yeah.
Not if you're spending $500,000 a year.
Me and my wife. Me and my wife, we do pretty good. You know, we live in a 1,200 square foot home. It's fairly modest. We're not doing a whole bunch of traveling or spending a whole bunch of money on anything. So just, average, reasonable lifestyle.
Where are you in the collecting Social Security?
Figuring on taking Social Security at 65, should get about $3,200 a month at that point.
Okay.
And how old are you now?
61.
Yeah.
So you're going to have to cover your living expenses out of that $1.3 million
for 4 years.
For 4 years
or so.
Yes.
So that's where the amount really matters. You need to sit down and do a very seriously well thought out monthly budget of all of your expenditures and potential expenditures and emergency expenditures.
And then I would be looking at the Social Security strategy very carefully, because that could be very impactful for a long period of time for you and your wife. I would run that 1.3%, because if you take out 5% a year flexible, you're ending up somewhere around 60 grand or so. If that covers the bills, that's great. But I'd want to do all this. I wouldn't. No offense to us, and we're going to give you some general advice here, but where you are in your life right now, you need a fee-only 100% fiduciary advisor that takes a very hard look at all of this, especially if you're going to pull the trigger here within the next year.
If for nothing else, to get a financial plan created, because this is the point in life where that plan really pays off, because then that plan acts like a manual for the rest of your life. You can refer back to that and go, okay, this is what I have, this is what I need, this is what I need to do, this is what I can, this is what I want to do, but my plan says this is all I can do. It's a guidebook. It's a really valuable, and it's not a cheap guidebook because it's very personal. It's like hiring somebody to write your autobiography. It would be expensive.
Right. So I got an advisor, meet with them next week. These are the conversations that we're going to have. So I guess I'll just go from there.
Now, you have a 100% fee-only fiduciary advisor?
I do.
Good for you. All right.
That's excellent.
These are the kind of questions you need to put to that advisor. And if that advisor is worth his or her salt, they will go through this exercise, this lifestyle and price of your lifestyle exercise with you to help you determine the best places to put all of these assets and how to use them to instigate the best strategy. And that's where they should also do a Social Security strategy. Any good advisor is going to advise you on every financial aspect of your life, even if it's not money they manage, or they're not a good advisor.
One final question, Sean.
Yeah, go ahead.
Where are you headed today?
I'm headed back to a remote location that I'm working. My work has sent me over the mountains, and I'm going back to work at my location here that I've been the past 6 years. But it's winding down, and so that's why I'm thinking about that retirement.
It's top secret. He can't tell you where he's going.
Okay, all right. You don't have to tell us.
That's why he's somewhere in Washington.
Somewhere in Washington.
Right,
I was going to say there's some good news, because there used to be a toll bridge that I took when I went to Whitman 100 years ago, Whitman College. But that toll is no longer there, so you just save some money for retirement right there if you had to cross it. But apparently, we're not going to know exactly
you and
where,
obscure information.
There we go.
That's very obscure.
All right,
Sean, thank you for calling us.
We appreciate you being there. Take care. 855-935-TALK is our phone number, 855-935-8255.
The Vernita Toll Bridge.
What was it? What was it over?
I think it was
the Columbia or something, or what?
I think that sounds right. That's something I should probably know.
No, you don't. You don't really need to know that. No, there's no
not
need
anymore.
No,
but you did at the time.
Are you still going to Whitman?
Well, every once in a while, sure.
Do the alumni thing?
I couldn't get the daughter too interested. She said she'd consider it if they moved it to California, and I made a couple phone calls, and that's not going to happen.
I mean, it is.
Yes, it's over the Columbia River.
It is in sort of a. I'm not even going to say it. It's not the prettiest part of Washington State.
Oh, stop it.
It's not the prettiest. There are some pretty parts to Washington State. And there's the desert.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Welcome back to Talking Real Money. Just to close it out with the Vernita Toll Bridge, because this is an important part of Washington State history.
No, it's not important.
So critical. The bridge was constructed in 1965 using, I love this number. Listen to the number. Guess what it cost to build the bridge in 1965?
$1 million.
In 1965, $3 million.
Okay, pretty close.
3 times more. Yeah. And then
today it'd be $1 billion.
The 22.7 million, it says. The toll was 75 cents at the beginning, and then all the way up to $2.50 in 1977. I just remember crossing it and making sure I had there were no credit. You didn't have cards. They couldn't take cards. You had to have the money. And here, a starving college student out in the middle of Eastern Washington, you had to have anyway, so the $2.50. So. And
the value of this information to our audience is?
History.
Bridge history?
Bridge history.
Are we going to do the Tacoma Narrows Bridge history now? If we're
Galloping Gertie?
If we're going to do famous bridges in Washington State history?
The I-90 bridge, that went down too, as well as Galloping Gertie. There's been some bridges that went to the bottom.
Went right to the bottom. Well, when your bridge is floating on a lake.
Yeah, that's true. It's not as far to go.
Yeah. Why don't they have one? Why don't they have a floating bridge across Puget Sound so you don't have to take that silly
I'd like
ferry?
them to build one here in Lake Margaret.
What would you go to across Little Lake Margaret?
I walk around all the time. There's homes on the other side.
You walk around.
Get there more quickly. Yeah, that's true.
This show degenerates so often. I don't know what's wrong with us. 855-935-TALK is our phone number. Let's go to Federal Way, Washington, a place we can actually identify. James, welcome to Talking Real Money.
Yes, welcome. I'm glad to talk to you guys. I need to talk to some information to talk to someone about a will and a trust.
Okay. What about them?
How do you go and set one up? I need to talk to an agent. I can set one up and make sure I'm doing the right thing.
Okay, what you need is either an estate planning attorney or how old are you, James?
I'm 73.
Yeah, it's estate planning or elder law. What's your situation, though, your personal situation? You married?
Yes, I'm married and got 4 children.
Okay.
And so I just, want to set things up so there'll be no argument or nothing. Like a lot of families get into. So
yep, absolutely. It's an intelligent move. What I'm getting at is whether you need to go for the complexity of a trust or whether a very simple will might do. And that's something you probably want to know before you go in, because who knows what the attorney's going to suggest. Sometimes they want you to do the more expensive thing. What's your portfolio look like? What is your net worth?
Oh, I guess right around about $2 million.
Okay. You may be getting into trust land now. Do you have some real estate and securities, and you want to leave these to your kids?
Yeah.
Yeah. You may very well be want to spend the extra couple of grand on some sort of a trust document, because it may save your heirs some hassles in probate. It can keep you out of them out of probate, which can be a slow, not cheap process. So. I would go find ask for your friends for some recommendations as to good estate attorneys or elder law attorneys.
Either one would do you fine. Again, I like the fact that Don's helped give you some guidelines here, because too often you walk in to say, hey, and then they say, guess what we have for you? Mm-hmm. Door number, this.
So I would just ask around, James.
I talking to different people, and it's hard to get an attorney, so I thought maybe you guys would have somebody over.
Do you have anybody, Tom?
I do. I'm very Kanoa Ostrom, who's going to be speaking at RetireMeet. He's one that we've worked with pretty extensively, and we trust him. He's done some work for me. He's done some work for our clients. You better spell that. Ostrem. He's based in Seattle, and he's done a lot of great work. As I said, he'll be speaking at RetireMeet. I mean, that's another place to think about. Come to RetireMeet. You could meet him. Yeah, and then you get a lot of other information. Don will even be there. So that's on March 7th, but Kanoa will be there, and you hear him talk about the things that are important to him.
March 7th. Where at?
At the Maidenbower in Bellevue.
You could learn all that. Just go online to RetireMeet, MEET.com, RetireMeet.com, and all the info's there.
And the lunch is good.
Okay. So it's RetireMeet.com.
That's it. Yep.
Okay.
It's an educational day.
12 years, yeah. So it's been pretty popular. We sold it out every year.
Okay. Yeah. So do you have a address or phone number I need to call to find exactly how to get there, or I have to just Google it?
No, just go to retiremeet.com, and all the information on getting there is on there. There's a link to the Maidenbower Center. Maidenbower is just right off the 405 in Bellevue. It's just like a couple of blocks off the 405 at 8th.
Look at you knowing the local stuff. It's actually 4th, but that's close enough.
Well, I don't know what. Oh, you get off at the 4th exit, right? Yeah.
Okay. It's all good. You're right.
I always get off at 8th because I go to the Marriott. I'm sorry?
Sorry?
is that the name of the building, Maidenbauer?
Maidenbauer Center. Yes, that's the large hall in which we hold it.
But, James, everything you need to know is at RetireMeet.com. And you get your tickets there and everything. And when you get your ticket, we're going to send you all kinds of stuff to help you get there.
Okay, so I'll go online to RetireMeet.com and then schedule my ticket. How much is the ticket?
I don't know. I think they're like $30, but it includes breakfast and lunch. So the food's worth it.
By the way,
and the food's
we'll help you get there. In fact, are you still driving the bus this year? You're going to run around and pick people up for retirement?
Yeah, no.
How's that working?
Yeah, no.
Oh, that's too bad. So much fun.
Taking a lift over. 855-935-TALK is our phone number. We have lines open.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Talking Real Money radio show becomes a podcast, and we're here to help you out at 855-935-TALK. Let's head down south to Houston, Texas. And Sarah, welcome to the program.
Hi, thank you so much for having me. I've been listening to your show for a while, and it's been really helpful. Thank you so much for taking my call.
Our pleasure. What can we do for you today?
Yeah, so I'm 35 years old. I have no debt aside from a mortgage with a very low % interest rate that should be paid off by the time I'm 47. I have about $460,000 invested. Roughly $290,000 of that is in a taxable account, and the rest is in retirement accounts. I earn about $100,000 a year, and I currently save about $50,000 a year. And my goal is to retire early. I've been saving very aggressively, and I'm trying to figure out the right balance between now and continuing at this pace versus spending more on life and time. And basically, I just kind of want to get your idea on, first of all, do you think I'm on track for those goals, but also how can I find this reasonable balance between maybe slowing down the saving and increasing spending without putting my long-term security at risk?
You're great.
I think you're going to be fine. Yeah.
Can I adopt you?
Yeah, pretty much.
Oh my gosh, you're doing so well.
Call my kids.
I'm telling you, you're set. I mean, literally, you could stop if you wanted to, and I'm not suggesting that you do that, but you could stop the saving, and this money would likely, but before you get to your 50s or 60s, that money is probably going to be in the $2 million range, which, given your frugality, is going to take care of you nicely.
Yeah, I mean, you're saving a lot. I kind of like what you said there, making sure you have the right balance, right? Because you need to do some fun stuff while you're still in your 30s.
Yeah,
you get
don't
old
wait
like
until
us
you're
and
old like me
it.
and everything hurts. You do it when you're young. But I would cut back on my savings a little bit. I think you should. Money is meant. We earn it to use it, and you're just the best, one of the best savers I've ever talked to on this show. Honestly.
I agree. Yeah.
Oh my gosh, thank you. That means a lot. Thank you so much. That means a lot. I've run post-fi calculators, Monte Carlo calculators, and the numbers are all telling me these things. It's kind of hard to believe. I'd hate to. It's difficult to stop saving at this rate. I'm in the habit of saving.
Don't stop.
You just told her to stop a minute
ago.
No,
I didn't. I said if you stop, but I'm not saying you should stop. I actually qualified that.
I think you should save less and get out and enjoy Saturday night a little bit more.
Try this for the next year. Instead of putting $50,000 away, try putting $40,000 and take $10,000 and do something that would really make you happy. Whether it's a trip or a car or adopting a dog or whatever it is, do something nice for yourself with $10,000 next year, and then see how you feel. Then in the year after that, you could go down to 30, maybe.
Okay, so you recommend by about $10,000. I could take about $10,000 off
easily without breaking a sweat.
And just know that that's.
Yeah, and by the way, if it doesn't work, you call us in 30 years. Oh, that's right, we won't be available. But you could. The thought holds. So.
Well, if I adopt you, though, then it
still won't matter in 30 years.
Because I'll spend it all. Yeah, you're right.
No, you won't be available. That's the point.
Right. No, I mean she could inherit it then, but
she will be. You won't be.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions.
Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy.
Information presented on the podcast is not personalized investment advice from Appellate Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appellate Wealth, a fee-only registered investment advisor.
Please see Appellate Wealth's ADV Part 2A on our website for information regarding Appellate's fees and services.
Appellate Capital, LLC, DBA Appellate Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appellate does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. I think I need a nap.